Good morning, traders and investors. It's Tuesday, July 8th. Hopefully everyone had a good day yesterday and a nice morning. Take a look at the markets. We are getting into a very unique situation. The market goes from one extreme to the other. Now, I have all kinds of different indicators and tools and other things, from feedback from members and followers with our inbox indicator and a whole bunch of other stuff that we follow. And more or less, the market has gone from a very bullish environment to a very bearish environment, actually kind of stretched over here. And now we're back into a super bullish environment. This type of market condition where we are right now, it is amazing how sentiment shifts. Everybody more or less runs for the door. They panic. They look for help. Their accounts go down. Most people always hold positions and have a fully loaded portfolio. So when the market goes down, they realize they don't have a strategy. And then, of course, when the market goes up, where we are right now, we have a crazy mindset again of investors that more or less are saying, I'm making money, so I must be doing something right. People are not interested in protecting their money. They don't think they need any help. And this is the scenario that unfolds over and over again. And we're starting to see and hear more or less cash is for cowards. I should just stay fully invested. People are talking about what risk. You just more or less buy every dip, and corrections are just temporary. You just have to hold through it. And this is the exact mindset that the majority of traders and investors have. As we know here with the asset reinvesting strategy, the markets are not that simple. Eventually, a bear market will hit, and it'll cost you 5-10 years of no returns and potentially massive damage. And especially if you end up bailing and getting out at a pressure point where you just can't afford to take losses anymore. So we're in this really unique situation. People's attitudes and behaviors are back to the normal of what happens in a rising environment, especially when we hit new all-time highs and we have this big surge. So that is obviously something that we take into account in terms of sentiment. We're starting to see that extreme sentiment in the market. Doesn't mean the market's going to pull back right away, but you definitely, and we do have a strategy to make sure that we don't get caught on the wrong side and give back all the gains and all of that stuff down the road. Now, today we are seeing a little bit of a flip from yesterday. Today, the small caps and the large cap techs are up and they're positive, so money is flowing into stocks. It is actually flowing out of bonds again today. We got bonds down 0.4%, picking up speed. They're definitely falling off a cliff. This was that bearish pattern we talked about, a series of lower highs, moving into this green 150-day moving average, and now it's getting rejected down. So money's flowing into stocks today, out of bonds. We're also seeing it move out of gold and silver. Not significant, just a little bit of money coming out of gold, a little bit coming out of silver as well. And more or less just a bit of a pause or breathe as the market tries to kind of wiggle around. Now, what's interesting, we haven't looked at the energy space in a while. This was a chart setup that is starting to look pretty good. This takes a long time to unfold. I remember we talked about way over here, talking about how these highs, how we're looking for a big breakdown below this significant pivot low and a big break. And then we're looking for a rally back up, a big kiss goodbye, meaning it rallies up, kisses back into either the bottom of this or somewhere into this resistance range, this whole pocket here of lots of volume. And more or less it has done that, and it's been rejected. That's what we wanted to see. This is what the big break to the downside, and now it's got this bearish pattern coming back up into resistance. And then eventually we talked about that this eventually, if the stock market rolls over, then the sector will also roll over, and it could be a great inverse ETF trade for a big move back down to these lows, or actually even way beyond there. So as this energy space breaks down, we can benefit dramatically from that. Now, as we've looked at this before, if we just kind of look at the price action here, we've seen energy stocks more or less moving up. Finally, they went from trending higher to more so trading sideways. And then I was like, okay, well, this is that reversal. Eventually we start to see this break down and we start to make a series of lower highs and lower lows. So if we actually take a look at the book, Technical Trading Mastery, which is a book I wrote, I updated it version 2, which happens to continue being a #1 seller in online trading for Amazon.ca, and also it's one of the number 2 gifted book on there as well. But if we take a look at identifying trends, this is where we're at. Let's just move this over a bit and squish this. Look at the energy space. It has been moving up with a series of higher highs and higher lows, which is the characteristics of an uptrend, and then suddenly it starts to trade sideways, and then it breaks down and it reactions high and has this type of move. This is what we talked about months ago. This is why trading and investing is about letting trades come to you. A surfer can't just surf anytime they want. They have to let the wave come. You have to let the set roll towards you and then hop on that. And so that's what we're doing. Patient investors can reap some pretty big rewards and not get caught up in a lot of noise. And so if the stock market, this high that's getting put in the stock market right now in general, like the S&P 500, if it does roll over and put a top in, which I still believe is going to happen, then we're going to eventually see the stock market sell off, and then this is probably going to bombs away and have a huge downside potential as another discretionary trade. We've done a few already that have unfolded very nicely. This is another one that I really like. This one is much more aggressive. It's an inverse ETF, a 2x, meaning this could fall 30 to 60% in our favor if the bombs away happens, that I think. So we're letting this unfold and letting that trend kind of work itself out and unfold over time. It's not about trying to short it or buy an inverse near the high. It doesn't matter if it happens at a much lower price. The key is understanding that the trend is down. We do need the stock market to be favorable, meaning if we're